Ladies and gentlemen, good day and welcome to KIMS Hospital Q2 FY24 conference call hosted by IIFL Securities Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rahul Jivani from IIFL Securities Limited. Please go ahead, Rahul.
Yeah, good morning everyone. I am Rahul from IIFL Institutional Equities. I welcome you all to the second quarter earnings conference call of KIMS Hospitals. From KIMS, we have with us Dr. Bhaskar Rao Bolineni, Founder and Managing Director, Dr. Abhinay Bolineni, Executive Director and CEO, and Mr. Sachin Salvi, CFO. Over to you, sir, for your opening comments.
Good morning, all of you. Good morning and a hearty welcome to the investors meet for the quarter ending September 2023-24. It gives me great pleasure to apprise you of the financial and operational results and other developments. I am sure you will find them encouraging. The company continues its onward growth trajectory. The financial highlights: gross revenue stood at INR 655 crore, a growth of 14.3% year-on-year and a 7.6% on a quarter-on-quarter basis. Operating EBITDA is INR 180 crore, reflecting an increase of 11.5% year-on-year basis and 12.5% on a quarter-on-quarter basis. EBITDA margin at 27.5% versus 28.2% in quarter 2 financial year 23 and 26.3% in quarter 1 FY24. PAT at INR 101 crore in Q2 FY24 against INR 106 crore in Q2 FY23 and INR 87 crore in Q1 FY24. Operational highlights: both inpatient and outpatient volumes have shown growth. The inpatient volumes increased by 9.7% year-on-year basis and a 10.6% on a quarter-on-quarter basis. The outpatient volumes also increased by 10.1% on year-on-year basis and 8% on a quarter-on-quarter basis. The average revenue per operative bed increased by 6.5% on year-on-year basis and it declined by 1.8% on a quarter-on-quarter basis. The average revenue per patient increased by 5.5% on year-on-year basis and declined by 2.6% on a quarter-on-quarter basis. Other developments: the Sunshine and KIMS Kingsway, Nagpur, are integrating well into the stream of KIMS and progressing well. We have started a IVF at Nagpur unit, which presents a good potential. Our expansion plans at Bangalore, Nashik, and Mumbai are progressing on schedule. As regards new technology and development, I am pleased to inform you that KIMS placed an order for procuring radiation therapy systems worth approximately $30 to $40 million from Elekta, a leader in precision radiation therapy based on Stockholm, Sweden. The equipment will be deployed in a phased manner over 3 years at different units of KIMS. The initiative will benefit the cancer patients by making available advanced precision radiation therapy solutions in all our units with past and present and future units. Academic activities: there has been a galore of academic activities ranging from clinical to social during the quarter. These activities help in sharpening the professional skills and shaping knowledge. The first of its kind workshop on NOTSS, non-technical skills for surgeons, was conducted with the participation from across the country and overseas. It was inaugurated by the Governor of Telangana, its Governor Puducherry Srimati Tamilisai Soundararajan. Surgeons are anyway trained in surgical skills, but they may lack non-surgical skills that will enhance the quality of treatment and outcomes. This is a first of its kind workshop conducted with international participation to enhance such non-surgical skills among surgeons. Many people suffer from unbearable pains without relief. KIMS organized a workshop on acute and chronic pain. Several doctors from within and outside state participated. This is the first time any hospital has conducted a cadaveric-based hands-on workshop to impart training and improve their skills so that they can able to practice on the patients. These would allow the professionals to have a realistic approach towards pain intervention and provide relief to patients. Sudden cardiac arrest. Nowadays, we are witnessing many people collapsing suddenly due to heart attacks. In response to the call given by the National Forum of 500 warriors who are trained in CPR to fight sudden cardiac death. Ours was the largest contribution from a single institution. Also, CPR workshop was held at Shamshabad Airport to train the CASF staff. These workshops will enable common people to save lives of others before reaching medical help. There are many incidents where we saved a lot of sudden cardiac deaths by training all of them, either police people or all the public aware of the massage of the cardiac event. Workshop was conducted on spinal X-ray, CT and MRI, integrating radiology into physiotherapy. When we do the physiotherapy, we need to understand what exactly is happening in the body. With that, we can able to get a good quality of physiotherapy, will vastly improve when it is thoroughly synchronized with CT and MRI. This workshop will help improve the quality of physiotherapy. The main culprit for many problems is lack of awareness on proper and effective waste management. In order to address this issue, KIMS conducted a workshop on waste management in association with the World Health Organization and COHOCON. To create a platform to enable research and publications by its doctors, KIMS entered into a research partnership with an Indian Institute of Public Health. All the said workshops attracted wide participation and facilitated sharing of knowledge and exploration of new avenues and respective faculties, and also created an awareness in the public itself. Awards and accolades. KIMS Hospital is accredited by an American Accreditation Commission of International that recognizes the highest professional and ethical standards in healthcare. AACI is one of the world's most experienced organizations in the provisions of healthcare organization, accreditation and clinical excellence certification services with high-level benchmarks. A prestigious magazine conducted a survey and presented a list of best doctors of South for 2023 in its Independence Day issue. The special feature showcases the top names in diverse fields of medicine. Among them are 10 doctors from KIMS. It is a matter of deep professional pride for us. The clinical accomplishments. I would like to share with you some of clinical accomplishments taking place in various centers of KIMS. KIMS Savera in Anantapur district, a premature baby, just 10 days old with multi-organ failure and also a cardiac arrest was successfully treated by doctors and thus budding life was saved. A 65-year-old woman suffering from a brain stroke was treated by performing carotid artery stenting, a feat done for first time in entire Rayalaseema region. The patient is treated under Arogyasri scheme. In Kurnool, the doctors treated a young girl of 5 years who was diagnosed with absent seizures, a rare problem with as many as 80 to 100 episodes per day. This condition is very rare, where the child experiences brief loss of awareness caused by an abnormal electrical activity in brain, and such cases are said to be about 5 to 10 per lakh. Such a rare phenomena was successfully treated in backward area like Kurnool in Andhra Pradesh. These are all done in the Tier 2, Tier 3 cities, which will give a quality care provided by the KIMS hospitals. KIMS Secunderabad, in a great gesture of humanity, parents of 14-month baby donated her organ that were transplanted in a 50-year-old woman who is on a dialysis as well as on a pacemaker. The complex procedure was successfully performed, overcoming the problems of age and size of the organ. A true testimony to the clinical expertise and state-of-the-art equipment available at the hospital. In an extremely rare case, only 300 reported worldwide and 20 in India, wherein some persons will have both male and female reproductive organs, was successfully operated in KIMS Secunderabad. A medical terminology, it is called as persistent Mullerian duct syndrome. In KIMS Kondapur, in a first at Hyderabad, Doctors at KIMS Kondapur performed a vertebral body stenting on a 65-year-old female patient. This highly advanced procedure helps cure osteoporotic fractures within no time. It is a minimally invasive technique where a metal stent is used to stabilize fractures. The entire procedure is done in 20 minutes with no blood loss as against an operation which would last for 3 to 4 hours. The above cases highlight the professional expertise and technology available with KIMS at various centers. Organ donations. The organ donation is a highly noble task that results in saving lives of others. KIMS has made a name for itself in this field. There were as many as 16 organ donations in the entire KIMS group of hospitals, resulting in about 36 transplants, and this is probably one among the highest in the country at a hospital. We are amidst of the season of bountiful cricket and delightful festivals. Yesterday's match of Australia against Afghanistan was very, very special. Glenn Maxwell single-handedly led his team to victory in spite of so many odds and physical impairment. He was not able to run due to pain, yet he scored with force and sixes. Thus, planning, perseverance, and determination are key of any success. This is true in business also, and we at KIMS follow the same traits in our activities. Let us hope that India will back the World Cup and bring cheer to the whole nation. I hereby convey my festival greetings to each of you and your families. Let me end on this happy note, thanking you for your trust and support and assuring you of our continued efforts to keep the KIMS flag high in results and rewards. Thank you very much for patient hearing.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 0 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles.
Rahul, before any question comes, that Thane Hiranandani work is going on, it is all as planned, and we need to enter into an MOU. That's why it is got delayed. Maybe in a short span of time, that also will be done. Work is in progressing.
Sure, sir. So, Malcolm, we can now start the Q&A.
Sure. Thank you. The first question we have from the line of Dhara Patwa from SMIFS Limited. Please go ahead.
Thank you for the opportunity and congratulations, sir, for the good set of numbers. My first question is, our Sunshine facility will be operational in November at the new location. So is the relocating or shifting cost included in the quarter, or it will come in the next quarter?
Part of it is included, but since the shifting, so OPD has moved on November 6th completely to the new facility. We're going to do our first surgery on November 15th. So the month of November, we'll see a lot more shifting cost.
So what could be the quantum of that cost which will be coming in the next quarter?
We are anticipating at least 2-3 crores towards the cost of medical equipment, and cost of running both the facilities for 2 months will be another incremental 4-5 crores. This is including the rent that we'll have to pay the old facility.
Okay, thank you. And we are getting regular updates on acquisition of minority stake in Kondapur Healthcare. So can you provide more color on that? Like, what's the thought process, on expanding specifically in Kondapur, demographics there? And what value or growth can Kondapur Healthcare provide to us?
See, what's happening in Kondapur, there is an existing facility which is a 200-bedded hospital, which is running on full capacity, nearly 90-95% occupancy. And we are expanding, we are tying up with one of the people who are building an asset, which is around 6 lakh square feet. Initially, we thought of taking, once they build a shell and taking into on a lease premises. when we worked out the financials of the GSTs and the lease amount and all, we want to tie up with a long-term credit organization in which they are funding for 25 years, and with that we are adding about an associate company, so that tomorrow all these leases will not be required. If necessary, we can able to merge that in KIMS Kondapur. That is the plan.
Okay, got it. Sir, next question is on Nagpur facility. Like, we have already reached a matured occupancy of 80%, and now we have also started IVF unit at Nagpur. So what could be the ARPOB growth in next 2 years for this unit, specifically for Nagpur?
So we have reached occupancy of 80% on the operational beds. There are another 70-80 beds that can be further operationalized, which is where most of the growth will come from.
And could we see more improvement on the ARPOB after including this IVF unit as well? Like some growth on the ARPOB front as well?
Yeah, ARPOB growth will continue to happen as we start doing more and more quaternary tertiary care work. IVF may not be a significant contributor to the growth in ARPOB. It's just completing all the services that we are offering. But when we start transplant, which we haven't started aggressively yet, and a lot of the other tertiary care work, the ARPOB could further increase.
Okay, that's helpful. So just one last question. Like, we are continuously acquiring minority stakes from last 2 years, and now we have reduced the EBITDA share of minority significantly to 12.6% now. So is there any target we have internally, like till what level we will be consolidating this share?
We would love to have the 100% acquisition. Either we will do a purchase, or maybe in the future we'll discuss in the board meeting and come back whether we can able to do all merger. The initial thought process of subsidiaries where the local doctors will invest, once it's totally matured, beyond that they may not get any value for them, then they would love to merge either in the KIMS, or they may able to sell out. Those who are willing, they have any need of money, we keep buying them. Otherwise, one day we will able to merge all the units together.
Yeah, that's helpful. That was my last question. Thank you.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Omkar Kamtekar from Bonanza Portfolio. Please go ahead.
Hello, am I audible?
Yes.
Okay. So thank you for taking my question, and congratulations on a good set of numbers. So can you please share what is the cash flow from operations generated for Q2 and H1?
Sure. So cash flow which has been generated from operations for H1 is about 345 odd crore. This is for H1. Q1 number I will separately give you.
Q2, sir, Q2.
Q2 number I will give you separately.
Okay, sure.
There is a tax payment during this half year of about 73 crore. Again, this is half year. I will give you separately Q2 numbers in some time.
Okay, sir. Thank you. And sir, we have seen that the ARPOB has marginally declined despite the volumes being increasing in some of the facilities. So any specific reason? Generally, because the monsoon period, the Q2 is a the period where you generally see a lot more diseases and people getting admitted for various reasons. So any reasons for specifically for the ARPOB to marginally decline?
So both question and answer you only gave. You are right. So basically, being a seasonal one, lot of fever patients, dengue fever and all. That's why the volume has increased. Their average revenue per operated bed and ARPOBs will come down, and also the ALOS has decreased. These are all the both reasons that it has come down.
Okay, so because the patients that are being admitted are for lower value or slightly lower margin treatments because of that.
There are more secondary care work, so that's when the ARPP reduces, as the result of which everything else falls.
Okay. And with respect to the KIMS Andhra Pradesh AP units, so sir, we are seeing very good occupancy levels in the AP region, close to 84%. However, still the what we can say the ARPOB here is materially lower. What is the reason behind this? Can you please shed some light on this?
So there are two reasons. One is it could be 15-20%, a little higher. There is one of our asset where the ARPOB is lower than 4,000-5,000. That's because we have a tie-up with an organization. So that one reason is this 15,000 on a normalized basis could be around 17,000-18,000. But however, the market in that those micro markets in Andhra that we are operating out of, that is the healthy ARPOB in that micro market. Our investments for these assets are also significantly lower, and it's more a volume-driven game than a pricing game there.
Okay, so we can expect these kind of levels of margin or a growth in the AP region in the same region.
These cities are growing; they're becoming bigger and bigger. Affordability in cities are increasing. So over a period of time, they may not become as rich as Telangana or the other cities, but there will be progress in how the pricing potential here will be.
Okay. And with respect to the incremental beds, the seats that we have shared on the expansion plan, the incremental beds in Nashik, Thane, and etc. How much would be the operational beds that would come in on site, say like day one or the first few periods? What would be the operational?
Nashik, Bombay, Bangalore, Kondapur, 50% of them will be, we'll start off year one with 35% of those beds being operational, then we'll scale it up to 50 and based on. So the capex for all of it will be done. It's only about the manpower. So we will usually, based on the traction that we're getting from doctors and all, we will size it up and accordingly plan. So around 30% is where we will look at operationalizing in the first year.
So all hospitals would be approximately 30%, 35% on year one, and then they would scale up approximately.
They would scale up, but again depends on how the doctor traction is.
Good. Thank you. Thank you very much. That's it from my side. I'll join back in the team.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Binu Patiparampil from Elara Capital. Please go ahead.
Hi, good morning. I was comparing the slide on upcoming projects which you have given in your presentation, and if I compare that to 3 quarters back when it was last given, I see a delay of almost between 1 and 2 years for most of the projects. So has the timeline changed, and is it why has it changed?
So there has, from our deck a year ago, we said 36 to 48 months. 36 months complete in the coming April. But there has been some 6-9 months delay because we were first earlier looking at a greenfield, then we looked at brownfield. So in executing that took us a year time, and in Thane we had some legal issues that we had to clear out and stuff. But at this point in time, the timelines that we have published, more or less, work on ground is happening to meet those timelines.
Okay. Just a follow.
These projects also and getting clearances on these projects.
Understood. Yeah. Just a follow-up on Kondapur. You were mentioning of a new entity to give credit or so. I couldn't fully understand that. Could you please explain that?
Could you come again, please, on Kondapur?
In answering an earlier question, Dr. Bhaskar had given some details about Kondapur, some new entity being created to give credit to the new facility that is coming up or something like that. I didn't quite understand what exactly that was. This was answer to the first question.
Yeah. So actually what we were planning, as I mentioned, that we have a existing 200 bedded facility which is on a rental basis as of now. Then it is 95% occupancy is running and we are losing a lot more patients because we are not able to provide. That's why a couple of years back somebody has acquired a land and they are planning to build the building. Then we asked them to build according to the hospital so that we will be able to take it on a rental basis. So when they want to give a shell, then we want to invest a lot more money on the interiors and the equipments and all those things. In that we are looking at a rental program so that the GST and the rentals, then we calculated for a period of 10 to 15 years, the amount of rentals what we are paying along with the GST. If we can able to pay a bank loan, which now we are getting a funding for 25 years, long years, so it is coming around the same. So that the depreciation benefit and other things will come to the KIMS. That's why we reconverted into as an associate company rather than a rental one. Am I clear?
Yes, yes, understood. So when you say associate company, are you going to invest in that company?
Yes, that's where we have bought some shares, 28.6% we bought so far.
Okay.
Which over a period of time in the existing Kondapur facility, depending upon the cash flows, we will try to acquire over a period of time majority of the stake.
Okay. And how large would be the total investment required to buy it out completely?
That will be around 500 to 500 crores for a 600 bedded facility.
Total project.
Total, entire thing of the equipment, building, interiors.
Okay. So once we spend this 500 crore, the entire thing will be owned by KIMS.
Yeah, we feel we will able to do it in a phased manner, like what we are all doing, like a subsidiaries.
Right.
Whenever we have an excess cash, we start using that, keep buying that.
Understood. Thank you. Thank you very much.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and one to ask a question. The next question is from the line of Omkar Kamtekar from Bonanza Portfolio. Please go ahead.
Thank you for the follow-up. Sir, last call, an update was given with respect to we were scouting a hospital in Malad on a lease basis or an operating long-term lease finance model. So, any update on that? Is that still on or is changed?
The project is still on. Like we also mentioned that it will take us a year before we settle all the issues that are there and get all permissions. So the project is definitely on. We're waiting for the landlord to revert on 1 or 2 points that he needs to settle. Maybe in the next 1 or 2 months he should come back with those points, and once those are settled, we can close the transaction.
So can we expect like at close of FY24 this might be a KIMS facility? Can we say that?
Like these are all the greenfield projects. We were in the phased manner. In the next 2 to 3 years, we have already engaged the number of beds required in all these places. We were planning in a phased manner so that if we acquire the land and keep spending, so without causing any inconvenience to the financial cash flows, and at the same time, mostly we will be able to do on our own internal accruals. So today, next 2 to 3 years, there is a 2,000 to 3,000 beds are coming into operational in all the facilities. So this will be after that.
Okay. And one more question on a
legal will take a little longer time on the land parcel when we want to acquire.
Okay. Understood. And on the same line, the incremental, the new facilities that we are setting up, Nasik, Thane, and Bangalore, etc. So these are also part owned, or these are like these long-term lease, financial leases, where at the end of the period we get ownership. How are these structured with respect to the ownership?
Nashik is a 51-49 joint venture where the company owns the land and building. Bangalore, the company owns 50% of the building, 50% is on lease. And Thane, it's a O&M format for now. If there are any changes, then we will own the complete land and building.
Okay. Fine. Thank you. That's it from me.
With reference to your first question on the cash flow from operation, for the H1, as I said, the total cash flow from operation was 340 crore. And for Q2 specifically, you have asked, it is 197 crore. Just to answer your question.
Okay, 197 crores. Thank you very much. So 197 for Q2 and 345 for H1. Thank you.
Thank you. The next question is from the line of Alankar Garude from Kotak Institutional Equities. Please go ahead.
Hi, good morning, everyone. Sir, if you look at what we had spoken about when it comes to Bangalore in the previous call, we had indicated about 750 beds coming up versus the 415 which we announced now. And also in terms of timelines, we are now talking about a fourth quarter FY25 quarter for operationalization compared to the earlier timeline of 2Q FY25. So there seems to be a delay of 6 months plus the number of beds have come down. Maybe we are indicating just one facility out here versus 2 earlier. So can you please help understand why exactly there's been a delay and also on the bed count, please?
So Alankar, on Bangalore, we're still going to do two and more facilities. Right now, we have signed the term sheet. We've signed the deal on the 450-bedded hospital. The other project also is going on. The landlord has to complete his scope of work and then come to us. And then is when we sign the documents. So up until we sign the document, we have not announced it or we have not made it public. We are expecting that to be completed by Jan-Feb. So when they hand over the facility to us, it takes us typically 8-9 months to complete our scope of work.
Okay, so broadly assuming the Jan-Feb timeline is met, so the second hospital also should be operationalized around the end of FY25.
Correct.
Understood. And secondly, if you look at Thane, can you help elaborate on the legal issues out here? Because this is just an O&M, the facility is ready. We were planning to sign the MOU few months back, but I think Dr. Bhaskar said we'll sign it in a short span of time. So can you help understand what's the current situation out there?
So the legal issues on the title of the land and building are very clear. The first 1.5 years is the time that we spent on clearing out those issues. As of now, on the property, the work is actually happening. So if anyone visits the property, the work on site is progressing. We're doing our interior works and services works to fulfill our timeline to open it in the next financial year. But there has been some delay in the closure of the full transaction because we had then brought in an investor to complete the transaction. And unfortunately, there has been a delay in executing that from the investor. He is confident that he will close it by this month. And if it doesn't get closed by him this month, then we will go ahead and do it on ourselves because we have sufficient capital available to complete the transaction. There are no more pending legal issues on the title and the land and building. So that is absolutely clear. That has been cleared 4-5 months ago. We have started work on site 2 months back, and in the next 1 year we should complete all the work on site.
The investor said that he will be able to close by June, and because of his issues of money to procure is getting delayed, and 2 days back he said he will be able to do it in the next 1 week time. Because it has been postponing for the last 3 months, we simultaneously arranging from our side also. But at any cost, end of this month, if it is not going to happen by the investors, KIMS will be able to do on its own.
So what's the breakup right now? Assuming the investor money comes in, what would be the breakup of capital allocation between us and the investor?
If the investor comes, then our capital requirement for this project is 120 crores.
And if it doesn't come?
It should be around 420 crores, 430.
Understood. The follow-up question here is, with the revised timelines, how should we look at the EBITDA drag from these expansion plans when it comes to FY25? And if possible, if you can throw some light on FY26 as well?
So on FY25, because all of these will be operational only except for Nasik, the others will be operational only for Bombay and Bangalore will be operational only for a quarter. And like I had always indicated in the past, on a revenue base of close to 2,600 and 3,000 crores, the impact that these three facilities will have will be less than 1.5% on the overall revenue.
Okay. The other question is on Telangana. So we have been around this 30% EBITDA margin mark for a few quarters now. Given that we are already at 70% plus occupancies, is there any scope for margin expansion in this cluster?
Yeah, so I think actually in this quarter, there would have been a margin expansion, but we had undertaken some one-time expenses towards renovation of the hospital, which if we didn't incur that, then there would be a margin expansion in Q2. So I think 31% is a steady state margin that we should expect in the Telangana cluster.
And one final question, if I may, what is the EBITDA share of minority right now with all the recent acquisitions?
I'll give you this number, Alankar. I'm not having this number handy.
Sure. Okay, that's it from my side. Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Abdul Qadir Puranwala from ICICI Securities. Please go ahead.
Yeah, hi sir. Good morning and thank you for the opportunity. So my first question is on the Nagpur facility. So if I go as to your investor presentation, Nagpur is already clocking an occupancy of around 80%. But on the margin side, at 80% occupancy, still the margin still seems to be quite lower as compared to what we are doing at a company level. So how should we see margins and overall revenue trajectory in Nagpur going ahead?
Right. So on Nagpur, if you actually look at the operational beds, it's still 250 beds against a bed capacity of 334. So that incremental 80 beds that are available is where a lot of the growth will come. And when that 80 beds get occupied, a lot of the margin expansion will happen. Plus, there has been a lot of focus on volume growth and revenue growth, which is what we were trying to achieve and stabilizing the unit for the last 1 year. The integration and cost optimization has not happened significantly like we would want it to happen. And a lot of these things had to do with attrition to play its role because of high cost of nurses and few other initiatives that we had to take. So the margin will get aligned to what we are seeing at Sunshine, and eventually it will get aligned to what we are seeing in Telangana and Andhra. But I think our primary focus was to stabilize and increase the volume, which we have now achieved successfully for Q2, and October, November also we're seeing similar trends on the volume growth and revenue growth. We will now focus on optimizing costs, and also as the growth in revenue happens, you will start seeing more margin expansion.
Okay. So just to clarify, if I would have understood this correctly, that though we have 250 beds operationalized currently, but in terms of the medical staff and the doctors, what we have is properly aligned to the actual bed capacity, which is 334. So it's a matter of where you operationalize the remaining bed, you will be able to scale up the margins here. Is that the correct understanding?
Correct.
Okay, sure. And so secondly, on we are talking about going solo in Thane and then acquiring some minority stake for hospitals, where we do not have a 100% shareholding. So, I mean, how should we look at this from a long-term perspective in terms of the funding? So, I understand you would be generating good amount of cash flows, but are you also trying to raise debt, to achieve these aspirations, or the funding would happen in such a way, or the stake buyout would happen in such a way that it is only restricted to the internal accruals only?
I think we will definitely leverage on debt, but I think we will keep it very tight. We'll keep it punished to 1.5 times or 2 times the debt to EBITDA ratio. And even if Thane, the investor thing does not happen, I think we are confident of doing it on our own, since we have sufficient cash flows available. And also we are buying minority share only as and when we have sufficient cash flow available. And if we'll have to defer that for a while, we will do that and take that decision.
Understood, sir. Thank you so much and wish you all the best.
Thank you. The next question is from the line of Rahul Jivani from IIFL Securities Limited. Please go ahead, sir.
Yeah. So on both Sunshine and Nagpur, we have seen a very good improvement in occupancies on a quarter-on-quarter basis. So how much of this occupancy improvement in Sunshine and Nagpur was owing to the seasonal business, and what kind of a trend do you expect on occupancies at these two hospitals going forward?
So most of the growth that has come in, Rahul, is in Sunshine Gachibowli and not in Begumpet. So that is a clear indicator that there is definitely some seasonal growth in this. There's no denying about it. But there has been a lot more stabilization, a lot of doctors who got added in the recent few quarters. We started seeing a lot of traction in their volume in Gachibowli. So if you actually look at the breakup, which we didn't provide here, but a lot of the growth actually happened from Gachibowli versus Begumpet. As far as Nagpur is concerned, again, there is a seasonal impact. Part of it is seasonal impact, but like I said, we had onboarded significant number of doctors in the last few quarters, and now we are starting to see results from those doctors. We are hopeful in the next 2-3 months we'll onboard more doctors, and the revenues should stabilize at the numbers that we had indicated so far.
Sure, sir. And in terms of doctor addition plans, both for Sunshine and Nagpur, how much of that is completed? If you can indicate in terms of, let's say, a percentage basis, in terms of, let's say, an X number of doctors which you wanted to hire at Sunshine and Nagpur. So how many of those doctors have already been hired?
So as far as Gachibowli is concerned, we are almost through. There's one doctor who's going to join in December. And with that, we don't need any more incremental doctors except for 1 or 2, and actually not immediately. And that's sorted. It's just that we need to start seeing the volumes go up like it is happening in the last 3-4 months. As far as Nagpur, I think we're still at 50% of what we want to add in our total capacity. And this 50% was important to happen because they are going to give confidence for the rest of the people to start coming on board.
Sure, sir. And sir, on Begumpet, earlier we were indicating that the impact which we will have on account of running 2 facilities would be to the tune of 20 crore. But I think this time around you have indicated the combined number to be around 7 to an 8 crore kind of an, yeah.
So we had optimized the cost, Rahul, wise. So earlier we had a 2-3 month plan to change over. Now in November itself, because the season is a little low, the occupancies are a little low, we're trying to optimize and see how the shift can happen sooner.
Okay. So that has led to savings as in terms of these costs coming down from 20 crore to a 7 to 8 crore kind of a number.
And some of the contracts with the medical equipment manufacturers to shift a lot of these equipment free of cost versus having an additional cost also led to this savings.
Sure, sir. And sir, on the Begumpet facility, on the Sunshine Hospital, we are already clocking 23% EBITDA margins, and with this rental savings which we will start accruing from fourth quarter, once as we shift to this new campus. So do you think that on Sunshine we can inch up to a margin profile of 20 to 30% in FY25 on a full year basis?
Yeah, I think we are at 23% for H1. And the rental cost savings for a quarter will be close to 4.5 crores. So 28 will be around 32 crores. Yeah, I think it should be not 30%, but closer.
Okay, sure, sir. So 4.5 crore is the rental cost impact for the quarter.
Yeah, 4.5 to 5 crores.
Okay, sure, sir. Thanks. Thanks. I will join back with you.
Thank you. The next question is from the line of Omkar Kamtekar from Bonanza Portfolio. Please go ahead.
Thank you for the follow-up. So, sir, with respect to I just needed understanding of whenever we expand, so it's mostly in a cluster in a specific state. So I want to understand the philosophy behind it and what are the next states. So we already are going into Bangalore and Chennai, other adjacent states. So I want to understand the philosophy and how do we mushroom. So we're looking at a mushrooming growth. Wanted to understand the philosophy behind it and how does that work.
So I think our focus is to just pick fewer number of states and do fewer hospitals but large format hospitals. And we believe just being present in fewer geographies will save a lot on bandwidth, will have a lot of optimization on the cost, a lot of benefits on doctor recruitment and talent acquisition in the clinical community. And also from a patient point of view, the brand is much more recognized in one geography. The ability to attract better pricing and market share from insurance companies is also, these are the benefits that we have seen in the Andhra and Telangana cluster. When there is opportunity in one or two markets to do a lot more number of hospitals, why to go to newer markets and try to reinvent the wheel is our thought process. So for now, Maharashtra and Karnataka is where we see a big opportunity, a big vacuum in the number of beds required versus what is available today. So, and we believe if we execute that story right, that itself can be bigger than what KIMS is today. So that's the reason we said we'll just stay focused on these two, three markets, and be able to scale it up very well.
Okay. And a corollary to that, the payer mix has very slightly changed. So for H1 FY24, the corporates the payer mix has increased by 2% vis-a-vis the FY23. Cash has come down. So are we actively getting partnerships with corporates, or are they approaching us? So how is that working? And is this going to increase significantly over say 2, 3, 4 years, and the cash proportion comes down, and the insurance also increases?
You're referring to cash and insurance, or you're referring to corporates?
So corporates has increased by 2% in the 6 months FY24 from FY23. So are we actively getting more participation from, or we are seeking that?
No active empanelment. We just whatever we are empaneled with all the companies. So sometimes during seasonal variations there is more demand from few of these organizations, and that's about it. But I don't think it will change. The cash and insurance will remain at 75-80%, and there will not be a decline moving forward. In fact, it will only increase because the markets that we are now getting into, like Nashik, Bombay, and Bangalore, all of these are heavily cash and insurance driven markets.
Correct. So the underlying thing was because we are going to enter into these markets that are heavily insured or have this insurance backing. So will the margin trajectory change, because you generally have a different revenue structure or pricing for these negotiated contracts with corporates or insurance? So can we see, is there a material impact that could happen on that front?
For the following year?
For maybe say 2-3 years, could that happen? Because generally these contracts are long-term contracts, and they are negotiated different prices from say a non-insured person or a corporate person or an insurance person. So can there be a material impact, say maybe upward or downward? Is the question on the margin.
There will not be a downward trend, but there will be an upward trend. It happens once in 3 years for a private insurance, and wherever government-sponsored schemes are there, it's a little longer, 5-6 years.
Okay. Thank you very much.
Thank you. The next question is from the line of Harsh from Bandhan AMC. Please go ahead.
Yeah, thank you. Good morning. Last quarter, you made a comment that the overall
Harsh, sorry to interrupt you, Harsh, but could you speak a little louder? Your voice. Are you speaking from your headset or speaker?
Headset. Just give me a minute. Is it better?
Little low. That's the reason. Much better right now. Go ahead.
Yeah. Last quarter, you made a comment that 1,500 beds would be added in Andhra Pradesh and Telangana. So from the PPT, we have 700 beds, Anandpur and Kondapur. That is in FY26 and FY27. How do we bridge the other 800 beds from the next 3 to 4 year perspective in those base markets primarily, which is Andhra Pradesh and Telangana, anything in Srikalikulam, Anandpur, Ongole? If you could help us understand for the remaining 800 beds.
Sure. So I think there is bed expansion in Anandpur that we have mentioned. Ongole, there is a bed expansion. It's a small bed expansion. That's why we haven't mentioned it, which is close to around 50-75 beds. Srikakulam, there is a bed expansion. And Vizag, there's a bed expansion of 75 beds, which we again didn't mention because it was something that the companies, the trust is doing and not us. The two big additions are Nellore and Rajahmundry. The reason we have not mentioned it is we're just waiting for certain timelines and clearances from the government, and once we get those, we will be in a better position to publish those timelines. So between those two assets alone, we will be adding close to 400 odd beds incremental capacity.
And these two 400 bed projects,
plus 200, 600, and then 700 breakup is already available. So around 1,200 to 1,300 beds. And there was another greenfield, there was another micro market that we wanted to open up in LB Nagar. So that also we have nothing certain at this point in time. And when there is something certain, we'll bring it to the board and take necessary approval.
Sure, that's helpful. But it would be a fair assumption that a large part of this base market expansion, the beds that we are discussing in micro markets, would be before the end of fourth quarter FY25.
So whatever has been published in the PPT will be done before the fourth quarter. Nellore and Rajahmundry, we are still yet to get approvals for. Once we do get them, it will take us 24 months to build that hospital. And that will be an incremental bed capacity of 400 beds.
Sure, sir. Thank you. Thank you.
Thank you. The next question is from the line of Namit Arora from Ind Growth Capital. Please go ahead.
Yes, thank you for the opportunity. My question was around insurance. So are you working on any internal operational projects? Because there has been some discussion, not specific to your company, but generally across hospitals, about, issues about customer processing on insurance, the time it takes, and...
Hello?
Management, I think we have lost Harsh. Namit, I'm sorry. So we'll take the next question. The next question is from the line of Abhay Marda from Yashvi Securities. Please go ahead.
Hello, good morning. So, am I audible?
Yes. Good morning.
So, I just wanted to you to throw some light on the Bangalore expansion that we are doing. It's like what is the number of beds and how many beds will be operational initially, and what is the ARPOB that we are looking forward to?
So I think, like we had indicated in the past, we will target to get around 700 beds in that micro market. We have one project that will come into operation in the next financial year, which is in a micro market called Mahadevapuram. Of the 400 odd beds, we will operationalize around 30 beds in year one. Obviously, our aspiration is to operationalize more, but based on doctor traction, we'll take a call. And the ARPOB currently in that market, it is around 60,000 rupees per bed per day. We may start off a little lower, maybe at around 50,000, and then as the hospital matures, it will scale up.
Okay. Thank you so much.
Thank you. The next question is from the line of Namit Arora from InGrowth Capital. Please go ahead.
Yes, thank you for the opportunity again. My question was around insurance. Are you working on any internal project or engaging with insurance companies? Because there has been some discussion about the time it takes to process insurance claims, etc., and some misuse. So I'm just trying to see how are you focusing on enhancing customer service and customer excellence given the issues around insurance. Thank you.
So there are a couple of third-party applications that are working to solve this problem. There is a significant delay in communication from the hospital and the insurance provider. We are not directly working with these companies because it will consume a lot of our bandwidth, but there are 4 to 5 players in the market who are trying to solve for this problem, and we have partnered with 1 or 2 to see if we can help them also solve this problem.
Got it. That's very helpful. Thank you very much and all the best to the entire team. Thank you.
Thank you.
Thank you. The next question is from the line of Omkar Kamtekar from Bonanza Portfolio. Please go ahead.
Yeah, thank you for the follow-up. So with respect to the pledging, so there is a small pledge of the promoter stake of 16.2%. What is the plan? So are we going to reduce it or is it going to stay stable? Just clarification on that.
As I was mentioning before also that my brothers has been pledged for their company and they are also planning to release it as early as possible. They were keeping some assets for sale that is going to happen. The moment it happens, at least 50 to 60% of the shares will be de-pledged.
Okay, so the pledging would be half, what do you say?
Yes, yes.
So any approximate timeline, maybe a quarter or 2 or maybe a year?
1 or 2 quarters, end of this financial year.
Okay, so end of FY24, we can say this pledging would go down under 10%.
Yes, yes.
Okay. Thank you. That's it.
Thank you. A reminder to all the participants, press star and 1 for questions. As there are no further questions from the participant, I now hand the conference over to the KIMS management team for closing comments.
Thank you very much for asking all the questions, and we are very happy that your company is growing as we expected during our IPO show time. Whatever we promised, we could able to deliver. And there are definitely a good plans in the next 2 to 3 years. We are tight, and then we are very, very cautious about our financial burden on the company. Mostly we will be doing internal accruals and as well as the debt EBITDA ratios we will not cross. We are very, very disciplined in that aspect. And at the same time, we will try to do which is good for the company, whether it is a light asset model in the long run and short term. So we are planning on that. So please, I think we will achieve what we are having in our mind. Thank you very much.
Thank you. On behalf of IIFL Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect.